Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.
What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about how to reverse engineer plays and how to pretty much reverse engineer big plays and how to consistently gain profits every single day. Now, this is going to be similar to what athletes do and what the pros do when it comes to sports. What do? They watch film, they review, and they then perform it like it's nothing. They perform it like it's nothing because it becomes muscle memory. So I wanted to show you guys these charts and how to pretty much backtest without backtesting, like the way that people show you how to backtest. So let's get right into it. All right. So boom and a boom and a good zoom. All right. So here's what we're going to do. We're basically the way that I backtest and the way that the Al Brooks method is and how most people will backtest is as such. All right, so we're going to use SPY on the 5-minute time frame, and we're going to take pretty detailed notes. Okay, the first thing I want you to understand is when you're trading, at least if you use like the strategy I just use like price action, moving averages, and momentum indicator. The momentum indicator I use is the volume RSI, and then I use moving averages on the 5-minute time frame to day trade, and that moving average is this one. The pink one is the 9 MA and the yellow is the 20 MA. So yeah, can we go further back? Yeah, this is gonna be good enough. All right, so what you want to do is, first of all, you want to pretty much just look at, okay, what happened today? What happened overall today? So overall today we had this pretty big downtrend, and you kind of want to look at the larger time frames as well and see like, hey, what's going on the larger time frames? In this case, we all know today is April 3rd, 2025. The market's been in this huge sell-off. SPY is in beyond correction territory, which means it's down over 10% from highs. So that's what's going on. So we're in an overall downtrend. So typically you want in a downtrend, you want to be looking for sell-offs. You want to be looking for puts to take your trades to the downside. If we were in an uptrend, you want to be looking at taking calls, taking trades to the upside. So I trade options. So I am looking for puts. So basically I want to stick to that. I want to stick to looking for puts. And if there's a really good opportunity to go long, I'll take it. But essentially I want to look for puts. And what I'm doing is when I'm reviewing is I'm looking, I take notes, blah, 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 read each bars, mark the times. But essentially what I'm doing is I'm looking for areas where it looks like I would have the best entry. Okay. So, and I just go from left to right on the chart and look at what would be the best entries for trades here. In this case, we kind of just went straight down forever and ever. So the number one best entry would be here on this break of the 15-minute opening range. We broke below this structure. We had a very nice bear bar. So we would want to enter after, make this bigger. So we'd want to enter after this bar closed. So after this bar closes, we enter on the open of the next bar. That would be the best entry. And then I also like to look for, okay, what would be like the second best entry? Well, the second best entry would probably be on the break of this key level here. This is after 10 a.m. So I'll mark that there, boom and a boom. And what other entries do I see here? So now we just kind of consolidate. Then we create this sort of a double bottom here. Double bottom. Oops. All right, we get sort of this double bottom, and then we get another break. So potential entry after that bar. So this is a nice bear bar breaking below structure. Nice entry that would send us pretty much all the way down. So nice. So on this day, it looks like there's 3 possible really good entries on this day. Now, the next thing that I'm going to do is after marking the entries, because this is pretty much a cheat code. This is pretty much a cheat code because when you're learning anything or you're trying to be good at anything, you don't really want to reinvent the wheel. Okay, the blueprint is out there for you. So what do I mean by that? I mean like, hey, how did Tom Brady win the Super Bowl? How did the Ravens win the Super Bowl? Defense wins championships, but then you also need a pretty good game plan. And if you just copy game plans from the past, then it should work in the future. So this is the game plan for today. If we look at it, we pretty much know the market went down. We already know what happened. Now we need to know how did that happen and why did that happen. So that's really the big thing about this. So the big thing is, all right, I know we got a break of structure here. This probably would have been the best entry. And I know it's cheating because I already know what happens. I know this goes down. But now I need to reverse engineer. How did this happen? Why did this happen? So what I start to do is, okay, I start to take notes. And I say here we have a nice, these are, and you really want to take notes on everything that's going on in that area that would be repeatable, that would happen tomorrow, that would have the same result, okay? So you'll see what I mean by that. So this is a nice bear bar, okay? This is a trend bar. Trend bars are big bars that contribute to the direction of the trend. Non-trend bars are tiny bars like that one, like that doji, like this small bar here. Non-trend bars usually cause consolidation. So these tiny little bars, okay? But anyways, this is a very nice trend bar right here that broke below a key level. Nice trend bar. So I'm taking notes about everything going on in that area, okay? Nice trend bar, breaking key level. And then what happened here? This was a 15-min opening range break. And then I'm going to say this is in the same direction of overall larger trend. So the overall larger trend on the larger time frames is a downtrend. So this goes in that direction. So that makes the setup a good setup. Okay. We also, what did we do? We we broke below. We broke below the open. So we're below the open. Below the open. What else is going on here? The volume RSI here is below 30. Okay. Vol RSI below 30. Okay, what else is going on here? We're below the moving averages. Okay, so not only are we below the moving averages, but all right, moving averages all inverted. What does that mean? They're not in order. So moving averages, if we're in, like, most people think about stocks and assets moving up. So in that case, the smallest moving average should be on the top. So the 9MA should be on the top, and then the 20, and then the 50, and then the 100. But in this case, the 9MA is on the bottom, this pink line, okay? So moving averages are all inverted. And I have my 920 crossover, which means the 9 EMA is below the 20 EMA. And this is bearish. Okay, so what am I doing here? Basically, I'm writing down all the pieces of confluence that caused this move to go down. So what happened? We had a nice bear bar trend breaking below this key level. It's also a 15-minute opening range breakout. We're below the 9 and the 20. The overall trend on larger time frames is a downtrend. We're below the open. The volume RSI here, look at this, is below 30, and it's super low. So that tells me that there's a lot of downward volume, a lot of downward momentum. And all the moving averages are inverted, okay? And that could pretty much say the same about this bar, all pretty much the same thing, continuation. And then in this case, I could say the same thing, and we're also breaking a double bottom. So pretty much just taking notes, okay? And then you could do the same thing for longs as well. So in this case, this would be, again, I would just look at this day, and I would say, hey, what would be some of the good entries for today? So I'd be like, oh, okay, right here is a possible entry. Here's a possible entry. And then you just take notes on these entries. I'm not going to write down a ton of notes again, but I'm just basically going to see, oh, the 9's above the 20. We're holding this support here. The volume RSI is above 50 and flying, almost above 70. Even here, it's above 70. We broke this structure here. So we broke above this previous high. We broke above this key level. Okay. So a lot of different things. So that's how you pretty much reverse engineer. You reverse engineer these plays. You go back and you review the charts, and you literally just click on areas where you think would be the best possible entries, and then take notes on what is going on in those areas. Okay, and that's pretty much what I did to become pretty consistent with getting these pretty big plays. And people are always like, "Yo, like how did you know to get in there? How did you?" It's because I reviewed these charts, every night for 4 years. Not 4 years, almost 2.5 years now. 2 years straight, like every single night. Like before, I look at charts like only when I woke up to try to trade. And that's what 99.9% of traders are doing. They're just waking up to just trade, and then they're getting cooked, but they're getting mad, and then they're trying to watch these videos. You don't need to be watching these videos. You can watch my videos, but you don't need to be watching like these YouTubers and stuff. Just go to the charts, and because all the information is there, and just look for patterns. Look for patterns that cause price, or that cause you to be able to make a fortune. So look where the best trades would have happened, and then take notes about what the heck is going on in that area that caused it to happen. Okay, so that's pretty much reverse engineering trading. Hopefully you enjoyed this video and take this to heart, because that's what the pros do. It's your boy, Mr. Fit to Flourish. Let's keep winning. I'm out.